Hello traders and welcome to another video review. Today is Wednesday, November 15th, 2023. Let's find out what's going on the Forex economic calendar today. As you can see, we got some data from Japan overnight. The GDP for the third quarter in Japan has deteriorated to the level of minus 0.5%, which is worse than the forecast of minus 0.1%. and way less than the previous reading of 1.1%. The overall GDP has deteriorated as well. Wage price index from the Australia for the third quarter is in line with the expectations, 1.3%. Industrial production in Japan, 0.5%, beats the expectations of 0.2%. And the CPI data from the UK are slightly worse than expected, 4.6% versus 4.8% expected, which is actually better in the terms of the decreasing consumer price index. So the inflationary pressure is decreasing from 6.7% to 4.6%, which is even below 4.8% expected threshold. PPI input 0.4%, which is a little bit better than 0.2%. And please remember that at 9 o'clock we got the ECB non-monetary policy meeting at 9 o'clock. At 11 o'clock we got the industrial production and trade balance data from the Eurozone, and then during the New York session we got the core retail sales, one of the most important data event of today. Then we got the core PPI in New York Empire State Manufacturing Index, then retail sales data and producer price index data. So very important data scheduled for release from the US at 2:30. At the same time we got manufacturing sales and wholesale sales from the Canada. At 4 o'clock we got business inventories and retail inventories excluding autos, and at 4:30 we got crude oil in inventories from the US as well. At 7 o'clock we finished the day with the MPC member Haskell speech. So pretty intense day. Data from the Japan published overnight, data from the UK published already, and plenty of the data from the US. So I guess we should start with the majors review, and this will be euro dollar. Okay, so as you can see, the euro dollar jumps very nicely out of the channel. It sets the local this high and the swing high at 1.888, and it has been consolidating around this level for the last 12 hours. So the local intraday technical support is 1.0867, and then we got, of course, this technical support at 1.0770. So the outlook remains bullish. We are far away from the 150 periods moving average on a 4-hour chart. Let me just switch to daily to see where is the next technical resistance. So it looks like the next technical resistance is located here at 1.0940. So this breakout to the upside looks very bullish. However, on a daily time frame chart we just hit the extremely overbought market conditions, as you can see here. So this level here might be hit, and then we should see some kind of a retracement on the euro dollar. Maybe the today's data from the US might trigger this kind of a movement. Let me just play with the Fibonacci. There you go. So we just hit 50% of the Fibonacci retracement. This is what I want to show you guys. There you go, and we need another line. So the 50% of the Fibonacci retracement is hit here, 1.0864, and let's make it black. And there is, of course, another one which is the 61% of the Fibonacci retracement, and this level is located at 1.0961, just above the technical resistance. So that area here might be very interesting in terms of the market positioning, because it looks like there might be some increased activity on this levels. Nevertheless, please notice the fact that we might start pullback or a correction or a movement to the downside right now, because we hit the extremely overbought conditions on a daily time frame chart already. Okay, we got some data from the Japan. So let's take a look at the US dollar to the Japanese yen. And this market on the daily time frame chart just made a big slide to the downside. So let's just switch back to the 4-hour chart in order to see this slide. As you can see, marginal swing high made during the extremely overbought market conditions as well. So let me just play with this situation here to mark the very strong supply zone. So we got this one, of course, and if we copy that arrow, we can clearly see that there is another swing high. This swing high was made at the level of 151.92, and then we got big movement to the downside. Let's extend this out. Okay, because we don't need to have okay, so something happened with my RSI. RSI is gone. Let me just back it up again. So I need my RSI. Okay, so RSI must be added. Okay, RSI, please. The regular RSI, thank you very much. Yes, now it's back. Okay, let me just remove one of the RSIs because we don't need two of them. There you go. So again, we want to extend this trend line here to see whether the market will hit it. Okay, fine. And yeah, we are reversing lower. We broke just below all of this technical levels, and of course below the supports, the key supports 150.58, 150.80 will act right now as the technical resistance, of course. So there you go. And we are approaching the short-term trend line support. The market conditions hit the extremely overbought levels, so maybe some pullback will be done here, but nevertheless we should see another slide to the downside soon on the US dollar to the Japanese yen market. It looks like we have exhausted the movement to the upside after this very big swings up and down happened. The other market we are going to take a look is related to the US dollar as well. US dollar to the Canadian dollar. We start with the daily time frame chart. As you can see, there is another slide to the downside here, and we got some data from the Canada published, scheduled for release at 2:30 as well. So we got the first level 1.3861. this is the technical resistance, and the other one is 1.3898, and this is the technical resistance as well. So we got this very nice supply zone. If we try to adjust the trend line here, it looks like this one would be the best, and right now we are still above this trend line, but we are already below 50 periods moving average. We are above 100 periods moving average. We are approaching the technical support, and the technical support is seen at the local low at 1.3628, and then we can even manage one more technical support at 1.3568. There is still a chance for this market to bounce higher, but please notice this situation here. Where's my arrow? There you go. So we've been doing higher highs, 3 higher highs, right? So it's obvious that we've done it, and the market on momentum wise has been doing lower highs. So there is a bearish divergence between what is the market doing and what is the momentum doing. So basically we should prepare for this market to move lower. Right now we are at the level of 46 points, just below the level of 50, just below the neutral level. Any extension to the downside would likely result in a movement to the downside on the market as well. There's a room to the downside here. There is a room to the downside, however, we got the trendline support, we got the local support as well, but if they are violated, then we should hit the extremely oversold market conditions very, very quickly. So that's the outlook for the US dollar to the Canadian dollar. Let's take a look at the Bitcoin. Let's take a look at the Bitcoin. We have a daily time frame chart, of course, but let's switch back onto the 4-hour chart, and you can clearly see that the Bitcoin is coming off the extremely overbought market conditions, and from the recent highs we drop 7.64% from the highs. Apparently we drop even 8.86%, so that's even bigger drop. Okay, but this was done already, so we are over 8% lower. Now these levels here will act as the technical supports, local technical supports right now. So we got 34,671, and we got the technical resistance at 36,207, or maybe even, okay, the 36,140. So bearish divergence has been resolved basically, okay, because we went lower from the extremely overbought conditions on to the extremely oversold conditions. 8% correction was done. So as we expected, we got this movement to the downside, and now the market is ready to move to the upside again, because the bearish divergence has been completed. The bearish divergence move has been completed. This is the traditional channel here. I don't think it's necessary to have it here, because the market doesn't respect the channel anymore, so it's useless to have it here. Nevertheless, what we can add here are some technical support levels that we will now use in our analysis. So we got 33,300 and 90. This level is no longer needed, because the market doesn't respect this level, and it's really hard to find any substantial level here. But I will change it for other levels. So I will change it for the swing high. So I will remove these ones here because they were already violated, and let me just move this line here. So we know that the swing high and the technical resistance is located at 38,027, and if we of course copy this one, we can manage to set the supply zone between 37,521 and the swing high. So this is the supply zone, tested at least 3 times, and then we went a little bit lower. Let's say this is the most appropriate technical analysis right now in case of the further movement to the upside. So we got our technical resistance, we got our technical support on the chart. The next target for the bulls is of course 40,000. So we know about it. It's $40,000, and this should work. This level here, 34,671, should act as the technical support for the bulls. So the market is ready to move higher after the almost 9% drop due to the bearish divergence between price and the momentum on the 4-hour chart. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.